What a day, huh? That was something else. Okay, so here's where we're at. We had on Friday, the Dow has its worst day, the sixth worst day. I did misquote that. Thank you so much, whoever left that comment. I said third. They had the sixth worst day on record. Well, none of that matters because today the Dow had its worst day ever on record. Horrible down day for the markets. I'm just adjusting here. I've been trying to sort of keep up with this all day. Very cool if you're interested, if you follow the stock markets, just to see something like that. That's one of those things where now you can say, I was a part of that. I remember that. See, I can say that for 2007, 8, 9, that whole scary mess in there. Some things that maybe some of you have never even seen before. Well, now you can say you saw the market have its worst day on record. So what this means, let's go over to the charts actually. What this means, I'm going to start with the Dow. Let's go Dow. Okay. We have officially erased the year's gains. And so really the year starts right here, not where this line is. It's actually right here. So I just kind of draw a little line. That's the beginning of the year from that red line over. And you can see, Friday was bad, but today erased all of it and closed below where we started on the year. So the stock market's actually officially negative for the year. Of course, it's February. We have a long time still left to go, but that gives you an idea right there. That one solid move gives you an idea of the scope of how aggressive the markets were to the downside. I'm going to run over to the S&P 500 real quick. Same story over here. Big down day. I'm not sure if this is a record move. I believe today is a record move for the S&P 500 as far as a biggest down move. It too has erased the year's gains. So we had this big move up all through January, and now it's closed below that. There's a saying that you're about to learn and never forget is that the bulls take the the bulls take the stairs, the bears take the elevator. And what that means is stock markets tend to go up slowly and fall quickly. You get it, right? No need to explain. So this is why people get scared of the markets. Now, why did the markets fall today? Think about what happened here over the weekend. We go into the weekend, the stock market has its sixth worst day on record. Where is that? That's all over the headlines. That's all over the media. Well, until Sunday, we were talking about the Super Bowl. But everything is showing you, oh my gosh, market panic. This is so scary. And everybody comes into Monday and they go, well, maybe I should sell my shares. Maybe I should panic. Maybe I should get out. And that's what you see today is people taking off more risk. You also have the short-term traders that have been just itching to get the markets to trade lower. They're finally correct, and so they're piling on their short positions. We're going to do a video shortly on what it means to be short the stock market, but basically you have a little bit of that going on too. At one moment, the Dow was down about 5%. It's actually down 5% at the moment. 7%, just to give you an example here, I'll go back to the charts, but 7%. If the Dow or the stock market were to fall 7% in the day, they would temporarily stop the stock market, and they call it a cooling off period or a circuit breaker in hopes that everybody kind of realizes it's not such a big deal and they come back eager to buy the stock market. We came close. We did not hit that today. As we're into the close here, the markets are continuing to fall a little bit. So really, while this seems shocking and scary, it's 5%. If you've been in the stock market for a while, you have much more than a 5% gain. If you invested at any point last year, you have a little wiggle room. Of course, we don't want to see it like this. Let's talk about what happened here. A lot of this was started off on the day being led by the banking stocks. Now, the banking stocks lead the market. We know wherever the banks go is where the markets go. That's how you can remember that. They say, what does it say? As the financials go, so does the market. That's the saying. Well, the banking stocks were lower today. They really started off our pull to the downside, and it was all because of Wells Fargo, at least to start. Wells Fargo lost, they closed down 9% on the day. Okay, got a little bit worse there. Here's the thing. The Federal Reserve came out and they told Wells Fargo, we're going to limit your size. Unprecedented. I mean, the fact that the Fed would step in means that there are some horrible things going on here. Basically, the Fed says, we don't like the way you're operating your business. What was the quote they actually used? The bank has widespread abuses to their customers and to their process. And so the Fed basically said, we're not going to let you grow anymore until sufficient improvements have been made. That's their words, not mine. Almost every analyst downgraded the stock like immediately. It was like downgrade, downgrade, downgrade. I get a little alert when that comes in. and it was just like boom, 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 boom. I was on the phone, and I kept getting the emails. They went through over to my cell phone, and the thing's going crazy. So look, Wells Fargo serves them right. They have target date funds, by the way. I'll just do this quickly. They have target date funds that were not on target, because target date funds you're going to see on Thursday. Watch our video on Thursday. We're going to talk about how mutual funds are not efficient and go into some geeky math details. But basically their target date funds weren't on track, and so they went in and they tried to overtrade. You can't do that. That's rule number one for a financial advisor, a banking institution. You can't do that. That's so against the rules. Well, they did that anyways, and some people found out. They lost $600 million from a lot of their customers. And then not to mention the thing they did last year where they were opening accounts names, customers, like new accounts without them even asking for it. Horrible. So Wells Fargo's suffering a little bit today. It wasn't all bad news. Let's take a look over here at Apple. It did close the day lower. Intel is the other one. It also closed the day lower. They were positive mostly through most of the day. Here's the deal. You got a company called Qualcomm, and you maybe you've heard of them. I don't know. Qualcomm suffered a big drop today because it appears that Apple is now oh, you can't see that. My bad. So it appears that Apple has decided that they may start using Intel for their chips and the little widgets and whatever that's in there, rather than Qualcomm. There's been a bit of a dispute. Think of it as a sort of a friendly marriage. They're all of a sudden disagreeing. They're sleeping in different beds. They're not talking to each other. It's very frustrating. Apple puts out this note that maybe we'll go with Intel. And Intel initially popped on that news. I can't blame any stock for being lower today. That's a rough day. Any stock that had good news that turned out to be bad, that turned out to trade lower, like Intel, you can't blame that there's something wrong with Intel. That was the market today that took that down. So those stocks a little bit lower on the day. I'll just cover, let's go and see, where did we land here with the S&P? Was there any stock that finished higher? I believe TripAdvisor. Wow, okay. So TripAdvisor, they had a little pop, 3.7% on the day. Mattel had earnings the other day. Oh, they gave back all their gains. I was kind of rooting for this one. So the other day, Mattel came out with their earnings. Not good, right? They're not doing well, but they're making the transition into a digital entertainment environment for the kids. And I think that'll pay off in the long term. It's obviously a lot of work to go. The stock was higher on the day, but again, it fell based on the markets falling today. Can't blame that one bit. In the S&P 500, Wells Fargo was your worst performer. Nothing else notable. QCOM shows up as a bad performer there. Whoo, that was a bad day. Let's see if there's anything else. The best performer in the Dow was Apple, and it lost 2.5%. That really shows how aggressive today was. Meaning the stock that lost the least, there was no positive stock in the Dow. The one that lost the least was Apple at 2.5%, which means all 29 or 30 other stocks lost more than Apple. Boeing was your worst performer, and that's kind of understandable. They've had a great run lately, so that getting a little bit of weakness today, no problem. As we're talking, the market's selling off even more. So you can see here on the charts, this is showing updated in real time here. The S&P closing even lower and lower on the day, now down by about 5.5%. You wanted a discount, this is your discount. It's starting here. Now I'm going to tell you what's going to happen from here. You curious? You're curious what's going to happen from this point? So the markets are down. They have been completely, negative now on the year. That's going to make headlines. Everything's going to go like, crazy. There's going to be good news. The White House, the Fed, or the Treasury Secretary. Mark my words, one of those three will say something comforting, positive. They'll have some number we've never heard of. They're going to come out with something that's going to cause a little bit of a lift here in the short term. I can't say that that's going to take us back to new highs, but this is how the the plunge protection team handles this. If you're curious what that is, the plunge protection team, they have an actual name. We just, the industry sort of labels them the plunger group or the plunge protection team. It's their job to go in and support this market now, and there will be a way that they do that. So be on the lookout for that. It'll be a fun study, right? Do we care if the market goes up or down? In the short term here, it doesn't really matter, but that'll be a fun little study, and we'll point it out in the videos going forward. Hey, I hope you're going to get some sleep tonight. If you have more than 10 years left to retire, or you've got a long time, this means nothing. This means opportunity. This is a great deal. You kind of sort of hope it stops for a while and then slowly drifts lower. When I say we want a discount, we want a earn the discount slowly over time. We don't want to collapse. That just scares everybody. We don't want people scared. We want them just a little concerned while we're saving for our retirement. If I can help you in any way, jazzwealth.com. We're going to put a few videos up here for you to watch. Be sure to check out Thursday's video on mutual funds and efficiency. I'm going to go into great detail about how you're going to learn a few terms, the efficient frontier and optimal portfolio theory. We're going to get a little geeky. We'll talk to you then.